Hey, welcome to the channel and thanks for stopping by. We're happy to have you and we look forward to giving you some information that'll help you on your home buying journey. This past week saw mortgage rates climb once again with the 30-year fixed rate edging up past the 7% mark. This rise comes on the heels of inflation data exceeding expectations, prompting a shift in the outlook for interest rates. So what's driving this increase? Experts point to inflationary pressures as the main culprit. Recent economic data indicates inflation remains stubbornly high despite efforts by the Federal Reserve to curb it. This has led to concerns that the Fed might take a wait-and-see stance on interest rates instead of dropping the Fed rate later this year, which was the plan at their last meeting. So what to expect this week? The coming days bring key economic data releases that could significantly impact the mortgage rate. Here's what to watch out for. Existing home sales. A decline in existing home sales could signal a softening of housing, potentially leading lenders to adjust rates to attract borrowers. Conversely, a strong sales report could solidify the upward trend that we've seen in rates lately. Thursday brings us jobless claims. Rising jobless claims could indicate a weakening job market, prompting the Fed to take a closer look at reducing the Fed rate. This could lead to a temporary reprieve for mortgage rates. However, consistently low jobless claims could go the other way, which will reinforce the Fed's hawkish stance, keeping that upward pressure on the rates. So what does this mean for home buyers? Prospective home buyers should brace themselves for a potentially more competitive lending environment. With rates on the rise, affordability will become a bigger concern. It's crucial to get pre-approved for a mortgage to understand your budget and make competitive offers. So consider these additional steps. Work with a mortgage broker. A qualified mortgage broker can help you shop around for the best rates from multiple lenders and negotiate on your behalf. Also, improve your credit score. A higher credit score can qualify you for a lower rate, saving you thousands of dollars over the life of the loan. Now, before I go into the last part, if you like this info, go hit that like and please subscribe. Here we go. While the overall trend points towards higher rates, the economic data released this week could introduce some volatility. A weaker than expected existing home sales report or a rise in jobless claims could create a temporary window for slightly lower rates. So staying informed about these releases and lender offerings can help you identify potential opportunities. Now, additional factors to consider. Beyond the immediate economic data, other factors can influence mortgage rates throughout the week. Things like geopolitical events. Global events and tensions can impact the stock market, which in turn could affect the mortgage rates. Also, keep an eye out for Federal Reserve policy announcements. Even minor adjustments to their Fed policy can have a ripple effect on mortgage rate. So, to wrap it up, here are some tips for home buyers. Number one, stay informed. Closely follow economic data, particularly existing home sales this week, along with the jobless claims, as they can impact mortgage rates. Number two, lock in your rate. If you're under contract for a home, consider locking in your interest rate to avoid further increases, especially if it fits your budget. If you find a favorable rate, after the positive economic data releases, lock that in. Number three, have your broker shop around. Compare rates from multiple lenders to ensure that you're getting the best deal, especially during periods of rate fluctuation. And last but not least, be flexible. With competition heating up, you might need to be flexible in your offer terms to secure your dream home. The week ahead is likely to see continued upward pressure on rates. However, by staying informed about economic data and working closely with qualified lenders, homebuyers can still navigate the dynamic market and potentially find opportunities to secure a loan that fits their budget. Remember, this is a fast-moving market, so consulting with a professional is essential for getting the latest insights and tailored advice for your specific situation. My team and I are here to give you information that you can use yourself to save some money, some time, and possibly a little bit of both. So until next time.